Okay, Ggrm's second quarter. The sales is negative 1%, so that's quite a slowdown, but not too bad. You can see how it's lower than the fourth quarter and first quarter, but we assume that sales now starts to recover from the third quarter, and we have sales growth of just under 3% for the next 12 months. Cash flow, we've changed the cash flow calculation a little bit, so we're going to strip out the working capital, and there's a very unusually high cash flow ex working capital as of the second quarter, 12 trillion. That's because we haven't had a negative, so the negative quarters when they pay down the tax, but they haven't paid it down. So we've had the longest run of positive quarters, which is why we get this unusual 12 months cash flow. Anyway, we assume that things go a bit back to normal in the next 12 months, so it will be similar with previously 7.9 trillion. So it would look a little bit odd, but it would look like that. And the cash flow continues to improve. In the balance sheet, this is pretty interesting story building up, possibly. So from quite a lot of debt, it's sort of been coming down. That's partly because they haven't been paying all the tax, but it's now almost, as of the second quarter, it's almost net cash. Let's see what happens to the tax payables, but we think, I mean, this is what the net debt looks like. It's coming up. Of course, it's got this amazing seasonality with the working capital, but it's coming up, we think, towards zero, and could be positive over the next 12 months, which would be a big change. In terms of profit, with the lower sales, there's a lower profit in the second quarter compared to a year ago. Slightly higher cash cost ratio. The average is at 88%, and we use that for the next 12 months to get a very slightly higher net profit, similar with the sales, 2.5% growth. So here's the valuation. We're using the average investment spending of the last 12 months and using our 1.6% valuation with a big 50% discount because it's pretty cheap. Less than 1 times sales, 1 times the assets, 1.6 times the equity, but with a 5.7% yield, we think. So it's very cheap, and with that 50% discount, it still gives a much higher target price, 127,000. Oof. So let's see, the focus on net cash possibly ahead for Ggrm, and a big potential re-rating of the shares.